Hello everyone, Lewis Crumpton here, and this is not financial advice. So, the time-old question, what is better at making money? Is it trading or is it buy-to-let rental property? Maybe you're a property investor and you're looking to add an additional income stream, or you're struggling with cash flow and you want to figure out another way to generate cash flow. Maybe you are looking to start your wealth creation journey and you are trying to decide between property, bricks and mortar, or financial market or forex trading. You might be in that decision making process right now. And if you want to learn about how to do money better, how to make more of it in less time, then like this video, make sure that you subscribe to the channel and click that alerts button somewhere. Now, I've been trading Forex and financial markets now for over 9 years, which is absolutely crazy to me. I can't believe how quickly that time has gone and how radically the decision to learn and to invest into myself, into my own knowledge, has changed the entire trajectory of my life, really. And after a few years of trading Forex, I took that capital that I'd made through increasing my account balance, used that success that I'd had in trading, and decided to start investing in property as well. Now, over the course of the next 18 months from that point of buying property, I actually bought 10 properties, which was a mixture of buy-to-lets and a mixture of multi-lets and HMO properties. Now, I tell you that not to brag, because there are people who have achieved way more in way less time than I have. The only reason that I tell you that and what I achieved in property is because I want you to know that I do know a thing or two about property investing and also about trading as well. So, who better then to ask the question about which is better, Forex trading or buy-to-let properties, which is the best investment and which one should you start with? So let us start out by listing some of the good points of owning a buy-to-let property, because there are good points on both sides. And I'll try not to let my bias get in here. But number one point with property is that you own an asset. That means, very simply put, that it is yours to control, it is yours to make decisions with. You can decide what you do with it and how you use it. As an asset that you own, it will hopefully, at least depending on the area that you purchase in, go up in value over time. That side of property is the passive side. In a world which is making it increasingly hard to actually own anything, owning property is a really good idea. If, and this is a big if, you have the money to start investing in property. Another good thing about property is that the income you receive can be calculated 2 months fairly easily. You should know what you have coming in on your rent roll. You should be able to plan to predict the cash flow from that property with relative ease. The difficulty with that comes when you have vacant properties. My fellow landlords know what I'm talking about, or when things go wrong. So now we're starting to actually talk about the unpredictable side of property, because it is unpredictable. Now, you may have tenants move out for no real reason with no warning. There may be a problem with the property that has happened to me recently with a water leak. I need to get that fixed, which will cost me at least £5,000 to put it right. Not fun at all whatsoever, not expected either. Another good point about property is that the income never stops, of course, unless it is vacant. If it's not tenanted, then you've not got money coming in. What I really mean here, though, is the way that I view property, at least, as I grow older and I want to retire, I mean, I could technically retire now, I will still be earning the same income from that property. It doesn't stop if I don't stop. It continues. That's pretty great, and is why I use the money I make in trading to reinvest into properties. One of the big problems is that, in my opinion, the best way to invest in property is using your own money. So don't come at me, all these people here who talk about OPM, other people's money, which most people don't actually have access to at the start of their journey. They have to go out and find it, either find their own or find other people's. And yes, property investors, I know there are ways to raise money. I know there is ways to find investors, etc., but that isn't the best way, the preferred way in my opinion. It is the way most people have to go out and get started unless they do something else to generate that capital first. I wonder what that could be. In trading, you can start with as little as £300 if you wanted to. I'd recommend slightly more, but trading is far better, far lower initial entry point. Again, that's just my opinion. This is not financial advice. Now, enter stage left trading and all the amazing things it has. With trading in the UK, you don't necessarily own the asset if you're trading it. It depends on which type of trading account that you go for, because there are different types. Now, going for the type of account I recommend to my mentees does have some advantages, which we will talk about shortly. And with trading, you will own the asset if you are purchasing stocks and shares, which is kind of more of a long-term thing. What you will unlikely have though is ownership of the entire company. So those shares that you buy, they mean that you won't have the ability, because you haven't bought enough to own the majority of the company, you won't have the ability to influence decisions as to what happens with the company unless you do become a majority or a very, very large shareholder or stakeholder. Just like Elon Musk did with Twitter, and now things are going crazy there. So when you invest with a different type of broker, like I teach my UK trading students to do, then you don't own the asset that you are trading, even if you purchase stocks or shares in it. You trade in exactly the same way, but it's almost like a mirror market. So that mirror market, think of the shadow world in Stranger Things, kind of like that. But that mirror market means that you don't own the asset. And that lack of ownership means that you can't be taxed, get that, can't be taxed on any of the profits that you make. You also can't write off any of the losses that you make, which is why they make it that way. Now, if you are following my methods, my strategies, and following the Bloomberg and Yahoo Finance and Business Insider star trading methodology, which is an approach that we take to the market, which is very much data driven, then you should be making really good returns each and every single month, just like me, just like my students. And those returns in the UK, they're tax-free if you use the right broker, which we teach you to do. Property, unlike trading, is heavily reliant on people. You'll often hear those successful in property saying that property is a people business, and they aren't wrong. Think about all the different moving parts, all the different people that are involved to make property work. Think about all those links in the chain that could easily break and cause you to be holding a bucket which has holes in it, causing you a problem. Now, we don't have that in trading. All you need as a trader is you, a computer, an internet connection. Don't believe what you see online that you need a Rolex and a Lamborghini, and you need the ability and the right knowledge in the right way at the right time. So you need to be able to apply it in that way. Does it take time to learn and master? Of course, but I help people rapidly get trading live, get trading safely and profitably through mentorship with my team, which saves them a heck of a lot of time and lost capital through silly little mistakes which everybody makes when they first begin. Property, by its very nature, is quite fixed, and it is locked into one place geographically, obviously, unless it's a caravan. And one of my greatest joys about trading is being able to make money no matter where I am with my laptop. Now, that being said, and to keep this a balanced video, because I do want to give both sides, your property may be based in one place, but you can be anywhere earning money if you have the right systems in place to manage it. Not though if, as the landlord, you are hands-on and are the one that deals with tenants, that fixes all of the problems, that changes all the light bulbs, that all those little things which can happen with properties. How many times do tenants seem to need help with the stupidest things, like I said, like changing a light bulb? I even had one that asked me to bring them toilet roll once. That is not my job. That is why I have a team in place when it comes to property. And I mentioned it earlier too, but the starting capital needed for each of these ways of generating income is very, very different. Even if we just price up the cost of going through the process of setting up the legal side of property and all the things which come with that, that already runs into the thousands. With trading, you need just £300 to start, although I would recommend slightly more, around 500, but no more than 1,000. When you first start, you are prone to making mistakes. limits, so don't go over that £1,000 maximum though. If you think the process of buying a property is quick, think again. It could easily take you 6 months to actually buy a property, let alone find one, let alone renovate it, let alone tenant it as well. The process often takes longer than 6 months. And if you started learning to trade today, depending on if you were going to go out there just by yourself and teach yourself online, if you have support, you're going to be trading confidently in a lot less time than it takes to buy a property. And then you have a skill for life, which repeats and repeats and repeats. You don't have to go out and find it again. Some people enjoy that property has a fixed income each month, as long as it's tenanted. And I'm actually one of those people. It's one of the reasons why I like to invest in property. It lets me plan and it lets me predict. The nature of property though is that the amount of rent you receive for the property will rarely increase substantially. It may go up over time if rent demand in that area goes up, and we're seeing some of that at the moment, and some areas do track with inflation, but not all of them do. Trading, however, is not a fixed income. It can fluctuate each month, but we like to hold steady as an average of probably around about 5% as a minimum, aiming for more than that though. That's the goal. Some of my mentees do even better than that, achieving over 10% some months, over 12% some months, and some have done that even higher in even just a week. The way that trading income works is that it grows exponentially. We always talk in Star Trading as percentages, but the cash values associated with those percentages will grow larger and larger and larger each and every single month that you compound the interest. That means that although you may start with a smaller amount of capital when you first start in your trading account, if you are consistent, if you are educated, and if you master the skill of trading, then your trading income could easily outstrip any other income stream and be tax-free if you're in the UK. So what do you think? Which one would you go for and why? Maybe the answer will change depending on what stage of the journey you're at. Let me know in the comments section. And if you want to learn more about how to do money better, how to make more of it in less time, then like this video, subscribe to the channel, and make sure you turn on those alerts. Share this video with someone who you think it might help or who's trying to make that decision as well. My name is Lewis Crumpton, and this is not financial advice.